A few years ago, we set up the first studio venture fund, which is around 30 million euros.
And this 30 million fund is to build 30 companies.
We invest €1 million into each company. If there's one thing you need to get right, is making sure you get the best founders, and the best founders you only get if you add value to them. We tend to focus on some of the deeper AI companies. We've built, for example, a breast cancer screening company that is much better at that than any doctor. We run more than half of the cancer screening in Germany alone, and are in quite a few other markets as well. I think one other thing that is super important to have a crazy drive. Generally, the things that drag you most in are not necessarily the ones that are doing the best.
And also, I have some live experience.
Wow.
Hi, my name is Max Pog. I'm an entrepreneur, and I've launched 3 profitable companies from scratch. One I sold when I was 17. 2 are active, and now I am interested in startup studios. This is why I've done 7 months research on the topic, and this paper went viral on LinkedIn, and I record interviews with startup studio founders. Today my guest is Rasmus Rothe, a founder of Merantix Venture Studio based in Berlin, focusing on AI even before it became mainstream. In 2016 they raised 10 million euro into the holding company of the studio at 50 million valuation. A couple of years ago, they raised 30 million into the fund, and they invest 1 million per company into AI companies. The studio takes 10% of equity, a fund takes 15% of equity, and the founders take 75%. They've created 9 companies, 2 exited, and all the companies are alive. Yeah, so we just improvise. So Rasmus, please tell about yourself, how you came up with the idea of founding Merantix, and can you tell your story?
Sure, no, great to be on the podcast, Max. Super excited today. And I'll give you a quick overview. So I'm originally from Germany, basically did the PhD in deep learning, so studied computer vision and neural networks. Actually realized the other day that I trained my first neural network 20 years ago, when I was 13. So I've always been intrigued by building smart systems, and basically in 2016 realized that there's a big gap, obviously, between what AI can do and what's in production, and that I want to drive that adoption, especially in Europe. And so with that, started Merantix together with my co-founder, Adrian, who's been an entrepreneur for 2 decades, had built a few companies before very successfully. And so we started, and then kind of it turned into a venture studio. So we've been building close to 10 companies, all AI first, in various industries, from healthcare, biotech, manufacturing, fintech. And we've also built quite a bit of platform around it, operating the largest co-working space for AI in Europe, running a services business in AI, being involved in AI policy. And we're super intrigued by the studio model, and I've been running it a couple of years and learned quite a bit along the way.
So 2 years ago, you switched to the model. But before this, did you have a fund investing in AI?
No, so our funding history was, so initially Adrian funded it, put the first €1 million or so into the company, and then we raised around 10 million into the holdco, into the studio company, basically to fund some of our initial product companies, but also kind of kick off the services company. And then a few years ago, we set up the first studio venture fund, which is around 30 million euros, out of which we now are incubating the first dozen or so companies.
Am I right that before going into the venture studio model, you had a fund and you invested in other companies? Can you tell what was from 2016?
So first we raised these 10 million euros, and that was to also incubate companies. So it was also the studio model. And at some point we realized that a fund is a more scalable way than raising money at the holdco. So we set up this fund to do the studio, but we always did the studio model. Just the funding first came from the balance sheet and then later came from our fund.
2 years ago started the fund. Can you tell about your traction with these companies, how many companies you started 2016, and then how was your development?
Yeah, sure. So we started 9 companies so far. We exited 2, one to Scale and one to SAP. And the others are still going. Some have raised follow-up rounds. Some of them are announced. Some of them are not announced yet, also with outside investors. So and right now working on actually 2 new companies right now. So it probably will be hopefully 11 by the end of the year.
What was your initial team when you just started in studio model? Like, how many people? What services did you provide? And what was equity split, if you can share, from like studio side and entrepreneurs in residence or co-founders?
Yeah, sure. So, I mean, we're quite a small team. We're not much bigger than any other venture fund. So it's really Adrian and me as the two founders. And then the management board, there's also Janet, our CFO. And then there's another person, Nicole, that runs the services business. We don't very much believe in centralized services, but more the power of the ecosystem. So, I mean, we always co-located our companies. And then 2 years ago, we started the AI campus, which is now the biggest co-working space for AI in Europe. So we have 100 companies and 1,000 people, 270 events a year on AI, co-located. And so that's some Fortune 500 companies, big companies like Volkswagen, like SAP, like Continental. It's a lot of startups. It's some investors like Index, First Minute that work from the campus. Some people on the policy side. So it's really like an ecosystem of AI companies. And that ultimately, is great for knowledge exchange, but also doing business with each other, of which our founders and residents, when they want to win first customers or validate an idea, can obviously benefit from. The second thing is we also have Merantix Momentum that builds more customized solutions for a services company. And through them, we also learn a lot about where there are new use cases where we could maybe incubate a company. Sometimes also our founder and residents go along with the services company to some of the enterprise to kind of validate their business case. So we don't provide that much dedicated services, but we have basically, the services company Momentum and the campus in our ecosystem, and our founders and residents can tap into that.
This AI campus is free, or you charge something for startups joining?
No, people need to pay for it. So both the campus and the services business are run as a business, profitable. People have to pay for their desk there. We think that is more sustainable.
What is your revenue streams for the company, for the holding company? Maybe you get management fees and then we'll get carry from the fund. Plus you have service-based business and AI campus. Is it right?
Exactly.
Or something else?
Yeah, that's correct. Yeah, that's correct. Yes. But we try to keep all these streams separate. Like our philosophy is very much that we don't want to cross-finance things because that creates a lot of conflict. So, ultimately the campus is its own team, the services company is its own team, the venture studio team is its own team. Each of them have revenue streams, but also costs, and that needs to add up. So we're not doing any cross-financing. And they all need to basically be able to live independently. Obviously, they benefit strongly from each other, and they're all sit in the same office. So, the campus team right now, when I walk 10 meters down the hallway, they're running a Gen AI hackathon with 100 people. If I walk the other 10 meters, there's the services team. Right in front of me, there sits one of our portfolio companies. So we've actually everything very close by. And I think that's very cool. And that's very unique also for a founder to come in and to have this ecosystem when they're initially just on their own trying to build a company.
So I've read that you have something about 50 applications per actually one hire engineers. Can you tell about what is your funnel of founders? Whom do you want to attract? So usually these are technical founders building companies, or you attract also non-technical ones?
I think usually the most standard founding team for us is like one person is very technical, can ultimately build the product, and has usually then some background in AI. And then the other founder is somebody who, has the domain expertise, so to say, and is the kind of maybe more business focused. That being said, many of the CEO type persons are also technical often. So I think if we start a biotech company, we want people to have experience there. If you start a company in fintech, it helps with experience. Generally, we want people to have an edge. So we tend to work with founders that, have been in a certain industry or there's a certain problem they want to solve. And then they join us, turn this kind of fuzzy idea into something super concrete with a good go-to-market, with a good initial team. That's where we can help finding a co-founder. We validate the idea. Often we try to even get 2 to 3 paying customers out of our network for the solution before we even incubate the company. So that gives quite some conviction also for the founder and de-risk the case. So the classical journey is, last year we had 1,000 people to apply to be a founder with us. We also actively reach out to people, and then we do a couple of interviews, and if everybody's happy, then we basically bring them 2 days on site. During those 2 days, they get to know us, but also we get to know them. We let them work together with them on a case. And then if that works well, we spend 4 weeks to dive into 4 different cases with them to validate them high level. And then hopefully after that, we know the founder even better, but we also know, is there something interesting to build? And then basically we go into this deep dive phase, which can take a few months, where we try to get these initial pilot customers. And then with that, we incubate the company, and then we invest €1 million into each company. And then roughly the fund gets like 15%, and then we get another 10% in common shares. So like the founder gives like 25% away, which is a bit more than, if you just raise money out on the street. But at the same time, they come, we help building the initial team, we help them find a co-founder, bring a couple of customers. We're pretty well connected to the follow-on investors. So ultimately, a lot of companies never raise, like then a later proper seed round or Series A, or, die before. So I think we can be quite helpful there with our ecosystem network.
So what is time between incorporation usually? Time from onboarding founder to incorporation company?
I think it's usually like 3 to 6 months. But then also when they incubate, they already have a couple of customers, right? We think it makes, like, we have the hypothesis, even though we love to move quick and we move quick on a lot of things, we think, when you initially ideate your idea, if you take a month longer or no, doesn't really matter. If you build a company for 10 years, you better make sure you run roughly in the right direction with a good team, and don't start working with a co-founder that is not a great fit, or start with a problem where you then realize 2 years in, it doesn't really make sense. So we like to take time in the beginning. So it can be a couple of months. And then once we incubate the companies, but also the companies get a lot of speed because they have already customers, they have validated the pain point, they have customers that maybe pay a few €100,000 already. So they're in a very, very different position than otherwise. And then with that, basically 12 months later, they can raise a strong seed round at the latest. Some companies even raise earlier, but that's kind of the range.
So what is your ideal profile of these co-founders? So do they have to be second-time founders or exited founders, or you also attract first-time founders?
I think we tend to have more people with experience, but we are also open to first-time founders. I think ultimately there needs to be a few elements that are right. I think, first of all, they need to have some skill set that allows them to build a company very quickly, because the reality is things move so quickly these days that you can't take like 5 years to learn everything. So it helps if people are like natural leaders, you can run teams, attract talent, sell, fundraising, have some ideas about some of these things to be able to move even quicker. And that's obviously more often with serial entrepreneurs. But yeah, we have some first-time founders who are incredibly strong. I think the second thing is some kind of edge. If people tell me, hey, I want to build an AI company, but I don't know what, or I want to build an AI company in an industry I have no clue about, I think that's sometimes challenging. So I think it's good to have an edge or insight in some industry. And it could be an industry. It could also be somebody who did academia and there has a great technical insight, but you need to have some kind of idea and concept where you are like excited about, and also have the credibility. And then I think one other thing that is super important to have like a crazy drive, like even to the extent that you're like irrational, because the whole journey is so hard. So if you're like kind of the rational consultant, there will be so many points on the way where you just give up if you just look at the pros and cons. And so I think it's super important to have people that are like, super hungry, super pushy, and try to make them possible, and some are driven to solve this problem, which comes back to this kind of edge side that you want founders to have an insight and edge. That usually means also that there's something they're passionate about and like I really want to solve and really make a difference in the world.
Do you pay salaries to your founders before incorporation, during this incubation program?
Yeah, we pay them a bit. Not like, I wouldn't say how much they could earn in the market, but also not like you could have a very basic life from it. We want to have them like cover at least the basic needs. But it's not standardized. That's why I don't want to give a number. It depends a bit on the needs. I don't want them to save during that time. we're not going to pay any fancy lifestyle, but like, as long as you can pay like food, rent, and your like bills, then you should be good. And everything else you need to cover from your own like savings or just change your living standards.
And also, I didn't touch this topic, but like, can you share some understanding of this funnel in terms of numbers? Like, how many entrepreneurs started this incubation program, how many finished, and how many companies then you kill after incorporation? So like, or you have like 100%
of the people who come 2 days. So we have a couple of interviews. People dropped out there. I mean, that's obviously where most drop out. I think of the ones who join us on site, probably a third join us as a founder. And then of those, 80% probably make the 4 weeks for cases phase. And then probably 50% actually end up starting a company with us, maybe 2/3, and get funded. So I guess by the time you join us as a founder full time, your chance is, I would say, at least 50% that you will also build a company with us, which is a lot, right? Like in some of these bigger accelerator groups, many don't end up starting companies or the company dies 3 months later. So I think that's pretty good. And even for the ones who don't start a company with us, some of them have started companies outside. So some of them found an idea that we didn't believe in, but they still started it. Or some, we didn't want to continue, but then they started the company the year later. So even from that perspective, I think it's a great learning experience. And then of the ones we funded, 100% are alive. Minus the 2 that got acquired, but everybody else is going and continuing. So that's also great, especially in current times where I think not everything is doing well.
In 1 year, like how many entrepreneurs start in this incubation program?
I think right now, and also next year, we probably plan to build 4 to 5 companies, which means there needs to be probably 10 people initially driving a company idea, out of which 5 then start a company, and then they all find co-founders as well. So that's kind of probably how many. So we don't work with many founders at the same time. Right now, we work with 2 founders.
Yeah, but I mean like this funnel when you attract some founders. So like there is a funnel, and what is on the top of it? How many founders start this incubation program, but then you understand that they are not good at it?
Probably like 1,000 people are in conversations to start a company, or at least apply or send us a message. Probably 30 come on site, and then probably 10 actually do with us ideation of a case and go work with us a couple of months, of which then probably 5 start a company.
And usually CEO plus CTO getting equal shares or like 37.5 probably.
Yeah, they each get equal usually. Not always, but generally, I think we like that. We like Adrian and me also have equal ownership. I think we like equal. You're both in there for such a long time. Even though there might be a difference now in experience, once you've built a company for a decade, it's probably you both have worked as hard. And so I think it's good to have an equal upside there as well.
Your 1 million is a pre-seed round to these companies. You don't charge something for your services.
So it's the same philosophy. So if they get a desk on the campus, like with their company, they have to pay the rent. They pay the same as everybody else. If they work with our services company, some do, many many build their own teams because I think that makes also sense. They also have to pay. So
this 10% of common shares which studio takes, it is for this incubation period of 3 to 6 months or for more? 3 to 6 months.
Yeah.
They can use some services, I don't know, marketing, design, development of your team after they got this 1 million, right?
They can, but they don't have to. I like when they build their own team because I think it's misaligned incentives. So I think a lot of them hire people. Sometimes they get somebody from my services company, but I think also it's good for the next VC to come in to see there's a full-fledged team and it's not too much dependency on any studio.
Do you pay salaries to your founders before incorporation, during this incubation program?
Yeah, we pay them a bit. Not like, I wouldn't say how much they could earn in the market, but also not like you could have a very basic life from it. We want to have them like cover at least the basic needs. But it's not standardized. That's why I don't want to give a number. It depends a bit on the needs. I don't want them to save during that time. We're not going to pay any fancy lifestyle, but as long as you can pay like food, rent, and your like bills, then you should be good. And everything else you need to cover from your own like savings or just change your living standards.
How do you see strategies for investors who invested in your holding company of your studio to exit? Like, do you plan to buy out their shares, or they will just participate in all exits of your startup? So, like, what is planned for them?
I think ultimately, they're in there for a very long term. So we also told them that we are not building this over like 3-4 years, but it could be several decades. So ultimately, they benefit a lot from every development under our platform, and so that's all the common shares in the companies. That's the services company. It's a campus. It's ultimately our brand and network.
So they have also shares in also service companies and campus.
Yeah, it's
right?
all under one holdco. Yeah.
Yeah, and this 30 million fund is to build 30 companies. So what is period when you plan to invest money?
Yeah, I mean, like we're still investing out of that fund. I mean, obviously at some point we'll raise the next fund. But yeah, currently we're still investing out of that fund.
For how many companies do you plan to do it? So only 1 million per company, or you do follow-on investments?
Initially, we invested a bit more and also had a bit bigger ownership, but we reduced that because we realized it's not good for attracting the best founders and also follow-up rounds. So that's why in some of the companies we invested more. Now it's this 1 million, and then we rather do a bit of follow-on. I think it's better to get early outside validation. And so that's why at the seed round, we want an external lead.
Can you tell like your experience of struggling with raising money for startups when studio had 30% or something?
Yeah, I mean, like we changed it. I think when you change it, if it's above 30, it's hard. If it's below 30, it works. I think that's a very simple rule. And so that's why we changed it more to 25.
Yes. So out of those 25, you invest 1 million. So it's a bit better than just take 25% for services, right?
Yeah, exactly. It's 25% for like $1 million. And I think there's a platform you can tap into. I see founders raising a couple of 100K angel money and then a pre-seed round, and then they raise also the same, maybe a bit more, and they also have as much dilution. So I think especially with serial entrepreneurs, they get that, and there's less of a discussion. It's funny that it's actually most of a discussion with first-time entrepreneurs because they read everything online and they're like, okay, this is what the capital should look like, and they also sometimes don't know how hard it is, so they don't see the value out of our ecosystem and our studio. But I think, yeah, with the new split anyways, I think the new equity setup, it's anyways, I think, fine. I think now we have less discussions around this.
Do you meet some investors who are positive about the origin of the startup, like, it's done in a startup studio with the focus on AI, so like you will help them to grow, so or they don't care like what founders were in the company?
I think many VCs ultimately look at the company as an independent company, and if the company is great, then they invest. If it's not great, they don't invest. If you don't have any weird ownership setups or any kind of like weird connection with a service company. So in that sense, I think most VCs look at our companies like normal companies. Some VCs really who know us well and know that we work very, focused and I think quite deep in the topic, also take that as a quality sign that, what we're doing is like legit, gives a certain quality of talent and go to market. If people don't know us, I guess they care less about it. So it depends. But I think that's also what we want to build in the midterm, that we become really this brand of quality, both for founders, investors, as LPs, as well as VCs.
About attracting money into the studio and into the fund, what do you think is easier for a studio, at least during the first initial phase? Do you regret that you didn't raise a fund from scratch?
I think generally the fund model is more scalable and more cleaner setup in the long term, and also it's less kind of questions from follow-on investors and also from founders. So I think generally I'm a big fan of the fund. If you can raise from scratch a fund that is big enough to support the studio, then I think I would do it. I think most people, setting up a fund costs money, there's a lot of things to get right. So I think it's often easier to start with an equity raise to just get the studio started, in a second step do the fund. So I think I would do it again the same way. You could also do that at once and say, look, like I raised some money in the fund, some in the holdco, and maybe all the investors get like stake in both the fund as well as the holdco. the studio itself. That way you have some working capital. But I think in the long term, you need to finance it from the management fee to make it more sustainable. I think like raising money just on the holdco is kind of hard in the long term because you always need to then justify valuation, and the valuation of your portfolio companies takes some time to grow, right? So you take then the share of each of your portfolio companies, plus you add a platform value, but that's often, it takes time until this is a really crazy number. And it generally grows slower than how much money you need to build more companies, because there's always a lag, right? Like if I raise 50 million today, it takes a few years until I put that in production, until that increases in value, thus the holding increased value so you can raise more money. So this delay is just too long that I think many people at some point, when numbers are less about fantasy but real value, struggle to raise at a valuation where the dilution is not too crazy or where they can raise enough money. In the beginning, it works, and honestly, for initial investors in the holdco in the studio, it's a great deal because we only have raised money once, and they participate now in a lot what we are building. And yes, the valuation back at that time was high. I mean, we raised around 10 million, gave around 20% out, so that was a high valuation.
How was it possible to get such big valuation?
I think at that time it was a lot of the vision and maybe some early signals we did, and ultimately also based on like Adrian and my person, that they would trust us. Also, a lot of investors from our personal network, they will build something great. I mean, we had no fundamentals to justify the valuation at that time, but I think the cool thing is that because of that, we kind of remain in control and kind of can also steer the company in the direction where it really makes sense. And for the investors back then, it was probably a very high valuation, but I think if they now participate the next 20 years in everything we're building, I think they will make a lot of money with this. And it will take time. So it's not as classic venture investing, but it's very cool long-term investing.
What were terms like? Do they 1x liquidation preference or participation when you have first exit? So do you return the initial investments first and then distribute all exits dividends money you get from them?
Yeah, I mean, like they have some preferential terms there. Ultimately, I think we don't think about distribution. We want to build more. So I think if money comes back in the holdco, we might even reinvest that. Let's see. Also growing maybe our platform. I think Adrian and me are very driven by making this as big as possible and impactful as possible. So I think, we have been thinking less about how to take money out, but more about how to accelerate things.
So you and investors are comfortable with being a part of a holdco, because I know that some studios struggle with either investors want exit or just an option that someone will buy out their shares, or founders want, so if they dilute their initial shares of the studio very much, so they feel like, maybe I have to create a new startup studio or a new holding company.
Yeah, the thing is, because we don't need to raise more money, I think we still remain good ownership there. We told all the investors that this might be a 30-year project, so I think they all know the horizon. I think if some people want liquidity earlier, there might be a way that they sell it to some other investors that are already in the cap table or even some outside. So I think if somebody really needs liquidity, there's probably a way to get there. But I think people also realize that, there's AI hype right now. We're working really hard. So I think it's not a smart time right now to sell.
Do you invest in other companies or only your companies?
Right now, only our companies, but that might also change in the future. Because look, we see a lot of deal flow outside of our studio. We will continue the studio for sure because we're so excited about the model, and I think it's great to build these high conviction companies. And we have also the process, the pipeline, the infrastructure to do that. But obviously now, as our campus and services business have also grown, and our ecosystem of AI companies, I think a lot of other investors reach out to us and are like, "Hey, we like what you're doing. Here's an AI company. Can't you do a technical DD? Can't you help with go-to-market?" So I think we're thinking also about like how we can kind of do that. I mean, Adrian and me have done some angel investments, but that's obviously much better if we can do that also from the fund. So I think that's the direction we're thinking in, of doing both.
how many times did you remember or thought that, oh, how great that we started AI 7 years ago because now it's a hype for this field. Do you feel this that investors have much more interest than, let's say, 2-3 years ago to AI?
I think generally we get more attention from investors, from VCs, LPs, talent, customers, corporates, policymakers. I think there's less also explanation we need to do. Like even a year ago, I still had to explain some people why AI is important and big. And I think that topic has gone away. Like I'm never explaining anymore why this changes the world. Obviously, it becomes also more noisy. And I think also right now there's a lot of capital invested in things that don't make sense. And so I think because we haven't done like blockchain half a year ago and now do AI, but we've been in the space for some years, we look at the hype a bit more calm. So I'm also super hyped, super excited what happens the next 10 years. Don't get me wrong. But I also think, now it's time to bring all this in production that is possible now. And that will take a few years. And there's great opportunities, but also not everything that people talk about will be super successful. So yeah, I think we can help a bit more with a good selection there, also because we are so hands-on.
Can you share some performance of the portfolio, like how many companies, so you said 2 companies exited, how many companies get Series A plus rounds, and do you have something like TVPI for investors for this first 10 million, something like this?
Yeah, unfortunately, I can't share too much. I mean, we have some up rounds in some of our companies, also more than one round sometimes. We sold 2 companies. So I think, we are, and also if you look into our companies from a revenue perspective, from a traction perspective, I think, there's some that are doing really, really well. But yeah, I mean, can't share numbers publicly, unfortunately.
Can you share like what companies do you create and how to distinguish AI bullshit and AI true companies that have potential to become unicorns and change industries?
I think ultimately it's the same for AI companies as for any other companies. You need to build a business that at some point, can become really big and valuable and make a lot of revenue. Even if it's an AI bullshit company, it can still be a very big business, right? Like if it works. So then maybe we will not finance it. But I think even some of these thin wrapper companies are maybe not defensible on the AI side, but they might still be big businesses. We tend to focus on some of the like deeper AI companies. We've built, for example, a breast cancer screening company that, is much better at that than any doctor. We run more than half of the cancer screening in Germany alone, and are in quite a few other markets as well. So that's a great case of like building a full-edged AI diagnostics platform for breast cancer in production, certified, that does the diagnosis really well, is in production, scans hundreds of thousands of women every year. We have a protein materials company optimizing, new materials using AI and even shipping them now already. Cambrium, super exciting. Vara is the breast cancer company. We have a company in manufacturing, Deltia, that analyzes workflows in factories. We have Brink, an AI ESG toolbox, working with some of the large banks and fund administrators and companies. We have a company in the fashion space doing virtual try-on. We started one in ADHD. We have a fertility IVF company doing AI. So kind of very different things. I think generally we are more excited about vertical AI businesses. That's where we come from, like taking kind of what's possible and then bringing it in these really deep domains. Because I think that's where ultimately the value creation comes from AI. And yeah, we continue to be excited about it. I mean, we want to build more healthcare, pharma, life sciences company with AI. I think there's a lot to do in diagnostics, medical, hospital ops, drug discovery, new materials in biotech. There's a lot in robotics, manufacturing, new robots coming, software for that, industrial automation. We're excited about all the back office automation stuff, people in offices just copying text from A to B, like automating that. Legal tech will start something very likely. Yeah, I mean, also niche areas to build foundation models like brain foundational models, foundation models for music, like, these kind of niche things. So I think there's so much to do. It's more about, I think our list of ideas is longer than the number of founders we have. So I think it's more about us now, also more actively in our network, looking for founders for some of these areas. Also, cybersecurity is very interesting with the intersection of AI. And then kind of building with them, because for most of these things, you need somebody who, either has a PhD in that field, is very deep, or knows the industry very well because they worked maybe for the customer side or tried to build a company there before. That is just much more helpful, I think.
What do you think is the most important from your experience in managing a studio and the fund?
I think ultimately you need an edge. Like ultimately you need like some kind of edge where you think you can build better companies. And it could be because you some have better ideas. It could be because you have a good go-to-market access. It could be because you have great talent pipeline. It could be because you can raise a lot of money. It could be that you are in an underserved geography in a complex domain. So I think like we benefit from being in a complex domain and like having a very value-add ecosystem and having a lot on the go-to-market. So, AI is complex and basically also, we can help strongly with go-to-market. I think those are our two biggest like value adds. But I think ultimately what it comes down to is attracting the best founders. And so that's related. I think if there's one thing you need to get right is making sure you get the best founders, and the best founders you only get if you add value to them. And so I think we're a clear value add. I don't think that's the right thing for everyone. Like if you are, if you know your customers already, and if you have co-founders and you know AI really well, like probably we're not the right setup. But if you know a domain really well and we can help you find a technical co-founder and we can help you build the trust to convince the first couple of ones to kind of buy your product that doesn't exist yet, I think then we are a great partner. So I think we tend to work really well with people who have a domain expertise in a certain industry, and think AI can make a difference. And then they join us, we fix the case with them so it's venture backable and help them assemble a great team.
Tell me, please, what are your learnings or mistakes you did during your venture studio experience? Like, did you change something after you understand that your previous model doesn't work?
Yeah, I think it's a few things. We changed the ownership thing for sure. I think, if a studio has like more than 30% in a company, I think it's very hard to get follow-on investors. That only works if you finance everything, or it maybe works in life sciences, but otherwise I think it's hard in the classic VC world. I think the second learning is that if you build a studio, usually quite like an operator type person. Adrian and me are definitely operators. We are builders. We like to do stuff. Like we're not just liking to route money from A to B. But you also need to realize that you are not the one building the company, because that also doesn't scale. So I think making sure you don't, being kind of hands-on and helping, and that's great at the beginning, but also making sure you don't get dragged too much in, because then the founder is still deeper in what's going on and it doesn't scale. So I think figuring out what to spend time on is, I think, always hard, because you always get dragged in these operational things. And generally the things that drag you most in are not necessarily the ones that are doing the best. The ones that are doing the best maybe need least of your help because they get it themselves from the platform. But those are maybe the companies you should spend more time with, because those are the ones returning your fund. So I think that's a big learning. I think we're constantly trying to learn, like, if there's any things we should centralize or not. I think right now we've settled a lot on centralizing as little as possible, and rather having with the campus and services like autonomous organizations that people can tap into. We're constantly debating where the best founders come from. We've done like active outbound. There's been like months where we've messaged thousands of people. We've also sometimes pushed like heavy on inbound, got a lot of applications. We sometimes try to do more topical outreach. We try to recruit in the physical world through the ecosystem. So I think the founder recruiting process, both in terms of where founders come from, but then also how to select them and who are the ones that are successful, I think is a constant learning exercise. We feel like we discuss that at least once a month, what we can improve there.
But what is your current understanding? Like, what are better sources for founders?
I think one learning is that it helps to have a bit of an idea where the company could be founded in. So if you go to people, both inbound and outbound, and tell them, hey, you can found any AI company with us, it is very unconcrete for anyone to join you, because they're like, I don't have an idea, or, are you really the best for this kind of AI? But also it's also then harder to compare people. So I think we're going in the direction that we are looking more for, hey, let's build a company at the intersection of cyber and AI. And here we have a couple of hypotheses about pen testing, around AI-related attacks, around, automating the orchestration layer and things. And then with that, talking to people both inbound and outbound, because then you have a more concrete topic and also a bit of an idea what you're looking for. That seems to be much more attractive to founders.
What are your challenges now? Like, what are the biggest problems you have in the studio?
Yeah, I think it's a constant thing is the best founders. I think if there's one thing you can always be better is, we have tremendously good founders, but also we talk to so many people. So I think also if people are listening, if you think you want to build a company in AI, reach out. I think that's it could be like one super crazy good founder that has the most crazy idea, and maybe even no VC wants to back it because it's not a team yet, and the idea sounds so crazy. Like, reach out to me, and let's have a discussion. I think that one founder could, build the next decacorn in AI in Europe, and so then, that might be the kickoff of this. So I think that's a constant kind of thing where you strive for the best.
Rasmus, do you want to talk something more about, maybe we didn't cover some topics, but you think that it would be important for either studio founders or founders of startups considering joining the studio? So maybe you have some topics I didn't cover, but you have some unique experience, or you do something differently.
Yeah, I mean, I think maybe addressing both groups. I think for studios, if you want to start a studio, run a studio, think about where you have an edge: geography, industry, your domain expertise, go to market, business model. Where somehow, if you're a startup studio globally for everything, for all industries, for all business models, you will not have an edge. You're like the most generalist. You're even more generalist than most VC. So I think nailing this edge, and that depends on your background, is super important. And then I think there's still so much studios to build because, they offer higher returns. I think they're a good way to build startups. And there's still ultimately also productionizes the startup building knowledge and helps people to not make the same mistake over and over again. So I think the world can need more startup studios. And then think a lot about your structure. As you said, I think there's a lot of things to mess up in your structure. I think I'm not a big fan when you raise too much money on the whole co for too many rounds, because then you will not have the ownership anymore. And that ownership is less about money or your worth of your equity, but more about control and making sure you can still control where it goes in direction. So I think a lot about the structure, and then think a lot about how you can attract the best entrepreneurs. And I think talking now to founders, I think if I were to start another company, think about the studios in your domain, in your region, in your business model. At least talk to them. I think, and look at what companies they've built, talk to their founders. I think you should at least consider working with the studios. I'm not saying it's for everyone. If you've already a team and an idea and the company founder, and some people who already want to invest, and what you want to do, maybe that's not the right time. But if you're in a new geography, if you need somebody help you with the early team, if you think somebody could help on the go-to-market, if you want to work with some more experienced founders, then I think at least talk to the studios, look at them. It's a bit like a VC also. They must like you, you must like them, but I think at least give it a chance. That's what I would recommend.
Thank you, Rasmus. This was great. A lot of numbers, insights, and you have dual entity model. So it was really interesting to go deep.
Oh, thanks, Max. I can tell that you spend a lot of time in this space. And I've also read everything you're writing. It's super informative. I also like that you give a lot of numbers. And I think that you ultimately also with that promote the studio model. And yeah, I can tell from your questions, there was no small talk. It's very much straight to the important questions around the consideration of how a studio is structured. Thanks so much for the great questions. If anyone listens to this, either wants to start a company with us or is interested in our studio model, feel free to reach out on LinkedIn, and then we can discuss. Or if you want to visit our AI campus, if you're in Berlin, feel free to work from our campus, visit us, check it out. You can work from here for a couple of days, and that's also a good way to get to know us.
Just testing new thing. So let's check it. Does it work? Yeah, and also I have some live experience. So it is doing nunchucks, Japanese martial arts. So yeah,
wow.
My operator here. Actually, it's not operator, but center stage. Yeah,
that's great.
I think that for studios, it's really great to be focused. You understand AI very deeply, and you have many years of experience in it. And it gives real advance to startups and real increase in chances of success of startups. Because if it is a general studio and some digital agencies move into the studio model, but it's always difficult to choose something where you are the best at. So I think that you reap benefits from focusing on AI. Interesting. Yeah.
Where
Thank
are
you
you
again.
based? Actually, you should visit us next time, Max.
Yeah. I'm near Lisbon in Cascais.
Okay, great.